Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra. Well, the mutual fund data for the month of September is out, and as per the Association of Mutual Funds of India, the data suggests that equity mutual fund inflows have slipped on a month-on-month basis in September. In fact, there is an almost 30% drop sequentially. Remember, last month we had seen the equity mutual funds well above 20,000 crore rupees. This time they've slipped to almost 14,000 odd crore rupees from a 5-month high last month. We have seen a 30% dip this time. However, we have seen that the fund flows have remained in the positive territory for the 31st consecutive month as well. To understand more on what are the latest mutual fund trends really, I am now joined by Mr. N.S. Venkatesh, the Chief Executive of AMFI. Very good afternoon, sir, and thank you so much for taking the time out for this discussion. Well, first up, let me quickly ask you about why this dip, the 30% dip that we have seen over last month in the equity mutual fund flows. Is this just a one-month aberration, or does it really talk to us about a trend that we should become cautious about?
I would say that it is not a trend at this particular point of time. It is essentially people booking profits. That is, they are taking profits from the large cap funds and a little bit from the mid cap and small cap funds. So that has resulted in the drop in the inflow from 20,000 crore to 14,000 crore. So we should not take this as a trend at all. Going ahead, we will see the flows into the equity funds going up for the simple reason that the growth story of India is intact, and IMF has recently said that the growth is at 6.3%. So we believe that the market will attract money into the equity funds.
Okay, let's delve down a little bit into the detail. There has been slowdown in the small and the mid cap inflows. Vis-a-vis, large caps have actually seen outflows. Could you break down the trend for us? What is really happening here? Since there is slowdown in all the three segments of the equity, equities that we discussed largely, the large, mid, and the small caps. Slowdown in small and mid caps and outflows in large caps. What does this tell us?
Essentially, one on the slowdown in small and mid cap, it is, I would say, a little bit of profit booking coupled with the additional volatility which we had seen in the small and mid cap funds, which had resulted in the deceleration there. As far as the large cap is concerned, large cap essentially profit bookings are happening, and now we believe that the large cap funds are at the, the valuations of the large caps are right at this particular point of time, which will then make people put more money into the large cap.
Okay. As an encouraging trend, the SIPs continue to be at the top spot. They continue to hit fresh all-time high levels even in the month of September. We've seen the figure of 16,042 odd crore rupees in September, and this is higher than the 15,814 odd crore rupees of inflows we had seen in August of 2023. What does this point out to? That the retail investors, come what may, have matured. Whether or not there is volatility in equity markets, they are continuing to believe that this is the best way to approach equities?
Yeah, definitely. I would concur with your views. I would say that they have reposed complete trust and faith in the SIP as an investment mode for participating in the equity growth story in India. So I would say that the retail investors have considerably matured. They are taking the right decisions in getting themselves into the investment story by investing through the SIP route.
What is your outlook, sir, on the SIP flows? We are already seeing month on month, every month we see record high flows coming in. By the end of the year, what is the outlook that you could share?
I believe that we will touch the 17,000 crore by the end of this financial year. Another 6 more, maybe 5 more months to go. So we should see another 1,000 crore accretion into the gross flows in SIP. So maybe around 17,000 crore is a number that we are looking at.
Okay, got that. The other striking factor in the data that you pointed out is also the outflows, where we have seen in debt funds. A significant amount of outflow has taken place. Debt fund flows have outflows have skyrocketed to over 1 lakh crore rupees compared to the outflows of 25,000 odd crore rupees. What has led to this substantial outflow, sir?
This is essentially a quarterly phenomena, and it gets aggravated during the half yearly and the annual closing time. So here, September is the half yearly sort of a closing, where essentially the corporates would have withdrawn money from the liquid funds to meet their tax commitments, and the banks would have taken the money out of the liquid funds to ensure that they don't maintain additional capital against the investments in liquid funds. So this we see every quarter end, and it gets a little bit aggravated during the half year and annual closing periods. So this is not a come as a surprise to us.
Not a surprise to you at this point in time. Let me just also bring out some other factors for all our viewers as well. The other data points that you have mentioned. Liquid funds have seen substantial outflows totaling 74,177 crore rupees. This also is a sharp increase from the 26,824 odd crore rupees of outflows we had seen in August. When we talk about the exchange traded funds, they have, however, seen an upswing in the investor interest. There is an inflow of 3,243 odd crore rupees versus 1,863 odd crore rupees right here. Very little pockets where we have seen improvement, but largely most of them have actually seen outflows this time around. Like we pointed out, slowdown in small and mid caps, outflows in debt, outflows in large caps, outflows in liquid funds as well. We've also seen the equity linked savings scheme also witnessing outflows of 141 odd crore rupees. Corporate bond funds also facing outflows. What does this all point out to, sir? Is the money shifting out of financial instruments at this point in time? Is any of that factor concerning you at this point?
No, I don't think that any money is shifting out of the mutual fund industry or even out of the financial markets at this particular point of time. It is essentially, I would say, that profit bookings are happening because markets are touching all-time highs every day. So because of which the profit booking had happened in September, so market is showing a little bit of volatility in the month of October. But up to September, the market was showing touching all-time high. So people were taking the profits out. And in respect of the debt funds, the monetary policy stance is what which gives a guidance towards the debt funds. So I would say that the interest rates are peaking. So people would have taken out their money out of the debt funds to avoid any interest rate risk. But going ahead, I would definitely submit that the investors should look at the debt funds at this particular point of time because the interest rates have peaked. So this is the
Okay.
right time for them to invest into the debt funds and get the accruals at a higher yield levels, and also get the capital gains when the interest rate starts coming down.
Okay, right time to invest in debt funds at this point in time as well. With respect to equity, where exactly do you see the flows coming in going forward from here? Is it going to be again similar trends, outflows from large caps and small and mid caps would continue to attract, or is it going to be a reversal at this point in time? What is your own sense, sir?
My sense is that we will see money coming into the large cap funds now because the valuations are attractive. So you will see money coming into the large cap funds and also into the thematic funds, those sort of funds where money will come so that niche segments are being attracted. So we will see money flowing into the large cap and then into the thematic sort of funds.
Okay, so on assets under management for the entire industry, the number has stood at 46.58 lakh crores. And this is also just a slight dip when we compare with the previous figure that we had seen. Could you reason it out to us why this dip has occurred? Because I remembered speaking to you last time, and you were pretty positive about the fund flow, the entire assets under management growing towards and aiming towards those 100 lakh crore rupees of assets under management in the future course as well.
No, that trend remains in the sense that we are quite confident that we will reach the 100 lakh crore by the 2030 sort of period that we have projected. So that trend remains. There's absolutely no issue. Interim, there could be little bit dips, essentially coming out of the liquid funds and overnight funds, where money will be taken out as part of the treasury management exercise of the corporates and banks. But I would say that maybe over the next 3 months up to December, if you are projecting, I would say we should see the AUMs going up, and we will see the AUMs touching near about 49 lakh to 50 lakh crores.
Okay. So like I was just briefly pointing out to all the viewers that ETFs have experienced an upswing in the investor interest. There has been an inflow of 30 to 43 odd crore rupees. Could you break it down to us and help us understand which segment has seen the maximum inflow? I also wanted to take your view as far as the commodity ETFs are concerned, gold, silver ETFs. Have they seen increased interest?
The gold ETFs will see a little bit of increased interest during October because of the geopolitical tensions that you are seeing. So because of which you will see gold as a safe haven. So people will start accumulating money under the gold ETF. The other ETFs will see inflows coming in for the simple reason the markets will rebound after the geopolitical tensions are a little bit alleviated. So we will see money coming in into the other ETFs as well. The passives as an industry will continue to show resilience as we have seen in the past. So we will see money coming into the passives as well as into the actives.
Okay, got that as well. Well, on that note, thank you so much, Mr. Venkatesh, for being with us on this edition and discussing all these insights about the monthly data numbers that you've shared with us, and hope to speak very soon with you again to understand more trends about the mutual funds going forward as well. Always a pleasure having you with us on Business Today Television, sir.
Thank you, Sakshi. Thank you so much.
All right, and with that, we will wrap up this special edition. But do stay tuned on Business Today TV, as a whole lot of discussion around the markets and business news also continues on the other side for you.
If you like the video, do like, comment, share and subscribe.